Welcome to the Bigger Cash Flow podcast, where we interview business owners and real estate investors that share tips and tricks on how to grow your cash flow and reach financial freedom.
Hello, everyone. This is Bo Kim with the Bigger Cash Flow podcast, joined by my co-host, Joe Kim. Welcome to episode 6, Investing in Short-Term Rentals. So last week, we talked about why real estate is the ideal investment. The 5 letters stand for income, depreciation, equity paydown, appreciation, and leverage. So if you haven't had a chance to listen to that episode, please be sure to check it out and send us your thoughts on what your favorite reason for investing in real estate might be. Now, with that said, I want to share this quick quote of the day with you below. And this comes from Fred Wilcox. And he says, "Progress always involves risk. You can't steal second base and keep your foot on first." And what I really like about this quote is that real estate, whichever way you look at it, involves some sort of risk, whether you're a new investor researching a market for the first time or learning about the different types of real estate investing, or whether you're an experienced investor looking to add more to your portfolio. That adversity, those hardships, I think that sometimes equals growth. That means you're always continuously improving. What are your thoughts on this, Joe?
Oh, I love the quote. It explains the kind of leap of faith that you have to take. But if you don't take that step and, get off your comfort zone, then you're really never going to accomplish anything. So I think it's a fantastic quote. I love it.
Yeah, another kind of phrase that comes to mind is that it's going to be difficult. It's going to be hard and painful at times, but at the end of the day, the rewards and the fruits of your labor are just so much worth it, right?
Yeah, and you might still be caught, and it may not work every single time, right? You may not steal the base, but you need to take those steps and make multiple attempts even after you fail. Otherwise, it's hard to progress for sure.
Yeah, I agree. So today we're going to talk about short-term rentals. This is Joe's favorite subject, right?
Mm-hmm. Yeah, definitely. I'm excited.
So I'm going to take a seat of a student here and just learn from Joe, because he definitely has the experience and the knowledge when it comes to Airbnbs and short-term rentals. So, for this episode, I'm going to be interviewing Joe and asking him, how he got started, what are the typical steps he takes to do his research, what are some of the costs involved, and what is his secret sauce in terms of becoming a good host and managing his short-term rentals successfully, because the numbers don't lie. A lot of these investors have found that short-term rentals sometimes can 2 times, 5 times, or 10x your net income. So I'm really excited to listen to Joe and get his thoughts on the short-term rental business. So Joe, with that said, let's tell our listeners how you got interested in short-term rentals.
Yeah, so the first time I heard about it was at a real estate conference in Oakland, California, about 2.5 years ago. And it was in the setting of corporate rentals, corporate furnished rentals. And it really clicked with me because I was really starting to feel unhappy about my traditional buy and hold rentals. And some of the things that I was unhappy about was the lack of control of tenants. I felt like, when you have a traditional rental, you pretty much have to let anyone who qualified to rent your home, and you have no idea if they're going to actually turn out to be good tenants or bad tenants. Even though you do all of your screening, you may still run into the problem of having a bad tenant. Also, if you're letting your property manager pick your tenants, you basically have very little role in screening your tenants. So I that part of the corporate rental what kind of person would you be renting to? It's a business traveler, right? I mean, who's better than that in terms of finding a high quality tenant? So that was really something that appealed to me when I went to this conference. However, I just like most people, when you first hear about something, you're like, well, how do I do that? Like in taking that foot off the first base to go on to steal the second base, I really didn't quite know what I needed to do. So I actually waited another full year to go to the second conference. And by that time, I was really getting antsy, and I decided to go ahead and learn about it online, take an online course, and then took my first steps in actually starting my first Airbnb or short-term rental business. And the word business is a really important part of what this is about. It's not just investing, and there's definitely investing part of it, but the business is something that's a very important thing that we'll talk about.
Other than the corporate types of renters, what else are you looking at, and how are you doing your research?
Yeah, so that's when I first heard about it, but I knew that short-term rental wasn't just for business travelers, but really it's for, obviously vacation travelers as well. But there's a whole host of other people who want to get short-term furnished rentals, and it has nothing to do with vacation. For example, you have people who are remodeling their home and they need to get out of their house for 3 to 4 weeks, and they don't want to spend that time in a hotel, but they want to be inside a home because they have a family, they need several rooms. Those kind of situations is common. Wedding goers in the summer is very popular. A lot of people want to come together as friends and family, and enjoy, renting a home together. But then they're going to the wedding, afterwards. So those are just common reasons. And the other one I like is a special kind of like business traveler, like people who are coming for training for certain things. I've had cops and sheriffs do kind of a team building training sessions. And so they will rent the house. So a variety of reasons why people might rent a short-term furnished rental. But the bottom line is they're all great guests. They all tend to be, wealthier um, travelers because they have the money, either or they're professionals. So very high quality tenants coming through the home.
Okay. When I travel for business, obviously I'm looking at price because, I'm not staying at a Ritz-Carlton or anything.
Hmm.
But also, within a reasonable budget, you're kind of going for comfort as well.
Right, definitely. Yep. And I think that the other thing that's really that I like about it is you have a lot more control over the occupancy
Hmm.
in terms of you can rent longer or shorter. You could rent at a higher price or lower price. So if you want very little vacancy, you can drop the price immediately,
Yeah.
right? So when you're in a long-term 12-month rental, during that 12 months, your rent is fixed. There is no going up or down, right? And then when you renew, you might be able to increase it by 3%, 5%, a very small incremental amount, or you might continue to renew with the current tenant at the exact same price because you don't want to lose them, correct? But with short-term rentals, that price can zoom up to $1,000 a night if there is a huge conference that's going on, or a music festival where there is very little availability of rooms in the hotels and other short-term rentals. Then you can raise your prices. So I love that ability of being able to take control and change the daily rates. You can say no to people that you are not feeling comfortable renting to, like college students who need, who want to cram in 12 people into one small 3-bedroom house, that kind of situation. So a lot of flexibility there that I love about short-term rentals.
Our listeners might be thinking, okay, it's very flexible and you can squeeze in more profit, but some other people who aren't comfortable with the risk might view it as, okay, it's not stable, right? It's not fixed. So again, it goes back to that quote we had earlier about, risk and reward. So you have to decide, what you want and what type of investor are you. If you're the type that you don't want to deal with, you know, messaging your potential guests and getting those notifications. And it is a little bit more hands-on, I would say, based on the conversations that I've had with other investors. So, you got to see what kind of investor you are as well. Let's back up just a little bit. And can you tell us how many Airbnbs you have at the moment? And maybe just give us an example of one of how you conducted your research. I know you talk about AirDNA. And then if a new Airbnb host wanted to get started, how would they go about doing that?
Yeah, so the very first thing you should do in terms of considering a Airbnb or short-term rental is to go to the site. So even before you go to like AirDNA, which is a great site, it's airdna.co, not com. So airdna.co basically is a data-driven company that looks at all the income and availability, vacancies, maps out the entire Airbnb layout of all the homes, and you can see who are the big players, who are doing well, who are not doing well, what their vacancy rates are, that kind of stuff. So it's actually a very excellent site to go after. But the very first thing I would do even before going there, because you got to pay money, and don't forget to cancel once you've done your data, because I've definitely forgotten in the past, and it just every month they just charge you for that service. So I would go to the Airbnb or VRBO website and look at the homes that are doing well, that mimic the type of property that you're interested in. So if you have a 3-bedroom, 2-bath, or you have a 2-bedroom, 1-bath, look at other homes that are exactly the same in the same area and look at their daily pricing. So if you see their daily price is $100 a night, and and they're doing well, they got a lot of reviews, you can also look at their calendar. Now, what's interesting is you can't look at the history, but you can look forward. So if you see that, let's say this is December, and you go to, let's say Kansas City, and you want to convert one of your properties 3-2 into an Airbnb, go to a 3-2 property with good reviews, and then go look at December and January. December's almost done, so you don't have that much data, but you look into January. If their January month is like 50% occupied, they're doing pretty well, right? And so then you can kind of calculate your, profits and your losses and your expenses, and figure out if this is going to make sense for you as to converting it into a short-term rental.
Okay, so let's talk about that. So as investors, we try not to get emotional or attached to the property, and we try to look at the numbers, right? Is it going to pencil?
Yeah.
Is it going to cash flow? So what are the key metrics? Typically, when you're buying a traditional rental, you might be looking at the cap rate for the area, or cash on cash if you're leveraging your portfolio. What are some of the calculations that go in, as much as you can share?
The number one cost is the setup cost. So if you already own the home, right, then you have your known PITI, right, your principal, interest, taxes, and insurance. And then your next cost that you need to consider is your setup costs. Now, setup costs is the furniture and the furnishings, um, And it can vary tremendously based on what kind of property you want to set up, how much of a high end or basic setup you want to put into a home. So there is a lot of variability in the setup, I think, but the most important thing is really your net operating income. And the way I look at that is your gross rents minus your expenses on a monthly basis. I think that's the most important calculation you need to think about. And you need to then price in the furniture costs after you've looked at that net operating income and remove that. What basically that means is that your first 6 months to 12 months, depending on how much setup costs you put in, that's your break even period. So so that, just make sure you keep that in mind, because you're not going to be making, net profit right away because of the large upfront cost. Now, that being said, the thing that's really tricky though is that some places are very seasonal. So if you're looking at the data in December or January, which is traditionally a kind of a low season for short-term rentals, you may think that, oh, this is not going to work. The numbers are not very good. But if you're in a very seasonal, lot of vacationers come in the summer and not so much in the winter, then I think you might be shortchanging yourself a little bit if you don't consider the prices will go up in the summer, your occupancy rate will go up in the summer. So there is that kind of variability that you have to take into consideration. And so I would look at the data both in the low and the high seasons and kind of blend them together. Thankfully for me, my homes are in places where there is less variability in seasonality, because I'm not in a very what I would call a hot, vacation rental city or town. So when I say hot, I'm talking about like major cities, city centers. I take that back. I do have one that's in a hot neighborhood or hot, and that's right next to the wine country in Napa. So I'm experiencing some major seasonal down, like low points right now in the winter, because not many people are coming out to vacation out there. But I'm, hopeful that in the summer that things will really turn around.
Okay. So that was a lot of information there. So let me just kind of recap this for our listeners. So, if I'm starting out my research, I would go to Airbnb and deciding on what part of town or what state that I'm going to be focusing on. I would try to look for properties in the area that are similar to my potential property. So if I'm converting a 3-bedroom, 2-bath, 2-car garage, single family home in the suburbs, then I'm going to look at that area to see maybe a property or host that has good reviews, and also, like the pictures, it kind of looks similar from my home, and then see their daily rates and their occupancy, correct?
Yeah. Mm-hmm.
Okay, so I would take that data and then plug it into my calculator. Do you have some sort of, the traditional rentals we have maybe an 8%, 10% maintenance and vacancy, kind of standard that we set as investors. Is there some sort of break even vacancy that you normally apply, or is that variable depending on, your monthly rent or pity and the daily rates? Is that all going to be different?
Yeah, so it's definitely different for each property and different location, but we can put this in the show notes, but there is a online calculator that is really nice to kind of break down your expenses and your profits so that you can sort of look at your net operating income. And the criteria that I put is, so I put the rent or the mortgage, the pity, and then you put in your utilities, your internet, your cable costs, all the expenses that you would expect on a monthly basis. And then you set your daily rate and you set your occupancy rate. And I put it at 50%. And if at 50%, if I don't break even, then I start to get worried. So that's kind of my rough estimate that I use, criteria that I use, is that you should be able to break even at 50%. What that means is that any tenant on, above 50% you should be making profit. Now,
Okay.
what's interesting about that calculator is it doesn't have one very important fee that everyone worries about. Well, what about cleaning fee? What's interesting about that is you don't pay the cleaning fee. The tenant pays for the cleaning fees. So with Airbnb, you can actually, ask for a cleaning fee that you use to pay your cleaners. That way you're not paying for the cleaning fee, and really your rent is pure profit in terms of, your income. You're not going to lose that to anybody. So that's one thing to keep in mind. A lot of people worry about, oh, I got to pay all this money on cleaning fee. And in fact, I just looked at my Airbnb account today, and I collected $27,000 in cleaning fees this year
Nice.
from guests, right? So yeah, cleaning fees are separate from the daily rates.
And is that something that varies from area to area, meaning like some hosts in a certain area might just bake it in with the daily rates, so you kind of have to go with the flow? Or does, like 90% of Airbnb hosts carve it out separately and it's almost like a chargeback to the guests?
Yeah, I think both VRBO and Airbnb will charge the cleaning fee separately. And actually, it's a brilliant move by Airbnb, because I would say most people are much more concerned about the daily rates than the cleaning fee, because the cleaning fee is a much smaller amount. Now, what's interesting about that is the shorter your stay, the more impact the cleaning fee has on your bottom line. So, so people who only, travel for 2 nights or 3 nights, the cleaning fee actually makes a big difference. So let me give you an example. So my 3-bedroom, 2-bath home in California, I'm typically charging on average about 200 to 225 a night. But I charge a whopping $195 for cleaning fee.
Wow.
So now, if you're only staying for 2 nights, now instead of paying 400 plus, you pay another $200 in cleaning fee. That's like, that essentially turns out to be a $300 per night, rate, right? So, but if you stay longer, like 7 days, then that $200 cleaning fee has a much less impact on your, on your essential daily rate that gets calculated. So, so those are the differences. And I have this one technique that I'd like to share right now is I have probably one of the higher cleaning fee rates in the industry, and I that's by design. So when I started this thing, I think I was charging $120 a night $120 per booking per stay, and I just kept raising it, 120 to 130, 140, 150, 175, and I got all the way up to 195, the current rate. And my thought was, well, if the guests are much more concerned about the daily rates, then let's just see what happens if I raise the cleaning fee. And nothing happened. Nobody ever complained about the cleaning fee being too high. So now, that being said, the caveat is the people who didn't like the cleaning fee may have not booked and just moved on to another property. So that's why I never heard from them. So just watch out for that. That tip may backfire if you start to have high vacancy rates. But I do ask guests, sometimes the rare chance I get to kind of ask them, like, oh, how come you didn't book my house and you booked somebody else's? And they're usually, concerned about the overall rate, but not so much about individual pricing, the daily rate versus the cleaning. So the other reason why I raise the cleaning fee is because minor maintenance costs, I
Mm-hmm.
pay that into the cleaning fee. So I only pay my cleaners currently $150. So I have $45 per booking per month or per stay. So if I have 5 bookings in that month, then I will have, roughly 220 bucks of cushion to pay for maintenance, pay for supplies, toilet paper, shampoo, all those things. So that way my daily rate actually becomes my real profit.
Can you kind of talk to us about how you network with other investors to get tips to market it well, and how you get great reviews for your rental?
What's great about Airbnb is that Airbnb does an amazing job of marketing your property, right? Everybody knows Airbnb. So I would say 90% of the marketing is done for you,
Mm-hmm.
but then it's what you do with that 10% that's so important. And I would say the number one thing that you could do is professional pictures. So when you go on Airbnb, right away you will know which ones are done taken professionally and which ones are done with somebody's iPhone, right? So it's true that we can take pretty good pictures with our iPhones or Samsung Android phones, but it's nowhere near the quality that a professional real estate photographer will take. And it's not just the taking of the pictures, but it's the post processing, how they make the pictures pop. And so I think that is the number one thing you could do well, is to take professional pictures. Other than that, the other things are marketing your property outside of Airbnb. What can you do? Because the problem with Airbnb is that although they do a great job, they also control your marketing, meaning that you can't prevent them from not showing your property or not showing your property on the first page. So here's a pattern that I saw consistently with Airbnb. I would get a flurry of bookings clumped together and just radio silence for like a week or 2 weeks.
Hmm.
Nothing would be happening. And then I would get a flurry of bookings. And then same thing. It would just be this weird pattern of feast or famine. And I realized that when you go and search for your property, there are days where you just can't even find it. So Airbnb does this weird, like, a selective marketing so that it actually makes the pool of rentals smaller. Um, and so there that way you get bookings, but then there are times where you just don't get bookings at all because your rental is not being highlighted, during that day or during that time. So that is a little bit frustrating, right? And scary, because there have been times where I look for my property, I'm like, where's my property? Like, people can't book if they can't find my property. So those are kind of the challenges with Airbnb. And therefore, the other way to do it is, why just go with Airbnb? Why not market on VRBO, a competitor of Airbnb? Why not booking.com? Why not furnishfinders.com? There are so many marketing platforms that you can choose from. But I would say the two best are going to be Airbnb and VRBO. And those are the two that you cannot ignore. And that you should definitely place your listings on. And then to talk a little bit about the differences, there are very distinct differences between Airbnb and VRBO. The type of people who go on VRBO tend to be older, and type of people who do use Airbnb younger. And that's because Airbnb is a younger company. It's a newer company. VRBO has been around for much longer than Airbnb. The other thing I had noticed is that Airbnb tends to have a lot of people who book last minute. So if I have vacancies a week from now, I'm not that terribly worried, because with Airbnb, somebody might book last minute. VRBO, on the other hand, tend to book much further ahead. If somebody's planning out their summer vacation 6 months from now, they go on VRBO and book that far ahead. So those are some of the interesting differences between the two.
Okay. Yeah, that's These are really good nuggets of information. So if you had to give us, your secret sauce, what would that be? And it could be more than one, but if you can kind of share, you talked about, the 90% of marketing is done for you and the other 10%, that's where the differentiation is made. What are some other, key differentiators that you go and do above and beyond the other hosts to, have a successful business?
Yeah, I think one of the most important things is, as always, location, 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 right? If your property is not the right property for short-term rentals, that's what you need to find out first. And one of the things I think I got lucky with is that my property is in, when I started in Dublin, California, is a location that's not, it's in the Bay Area, San Francisco Bay Area, but it's not San Francisco. It's not Palo Alto, Mountain View. It's not Oakland. It's not in like major city centers, but it's a sleepy suburb, 45 an hour away from the actual city center. And so a lot of people would be like, why would you be successful doing it over there? Well, the success of short-term rental depends on your competition, supply and demand. So even if you're in a very hot part of the country, if there are a ton of rentals that are competing with you, it's going to be very difficult to break into that market, because why would they rent from you when they could rent from somebody who has 200 5-star reviews? And so it's going to be difficult getting started if you're working in that very difficult competitive market. Now, if you can find a market that has a very low supply and high demand, that would be fantastic. So that's, I think, one of the things that you can look for and try to gather. But then, like anything else, in those very competitive markets, the supply will start to come up. So that's something that I think that's to watch out for. So I like markets that are kind of boring and not as seasonal. So far, I tried my hand at this seasonal, kind of more hot area, and it's not working out as well as I hoped. But I'm still hopeful that in the hot season, the jury's out. Until I hit the summer, we'll see if it's going to work out or not.
Yeah.
The other thing I would say is always be cautious about saying yes just to make money. I think in the short-term rentals, when you say no to a suspicious character or something doesn't feel right, don't feel bad because you're like, oh, I just lost a booking. I just lost a potential client. Because vacancy could be a very good thing. And let me say why. Because the last minute people who book tend to be business travelers, and the business travelers tend to be price insensitive, meaning they are not paying for that rental. Their company's paying for it. So they're just happy to get the home in the right location that fits their needs. So your goal is constantly should be not to worry about vacancy, but your goal is to be, how do I capture the price insensitive, highest quality tenants? Because guess what? Those tenants may come back again. They may become your repeat clients. So I've been actually, now that I've done this for a year, I'm starting to get the repeat clients who are coming back from last year. And that is a fantastic thing. Once you have that, then you're going to have a big competitive edge over somebody who's just starting off, over your competitors. And so your goal is always to be providing the best service to those kind of clients. And honestly, you're trying to provide the best service to all your clients, because you never know sometimes until they come back that they are actually VIP repeat clients. So I think that's something that I always try to do, is that I always try to look at each guest as a potential for them to come back, and to encourage them to come back, and encourage them to market for you by telling their friends and colleagues about your home. So I think those are kind of things that you can go after that gives you a competitive edge.
Okay. Are there any amenities or perks that you might especially leave just for your guests?
That's an interesting question. I think the biggest amenity, and this is again, you're just gonna laugh at this, but the biggest amenity is the number of beds, right? So uh, everything else is secondary because how many people can sleep in their own beds and how many people you can fit into your Airbnb or your home is a really important thing. So you've seen people like cram in, like I've seen like, 3 or 4 bunk beds and crammed into one room, that kind of like craziness. I'm not talking about that, but I'm talking about trying to make your space a comfortable space for your guests, but at the same time allow for a larger number of people, because to them that's a cost savings, right? So instead of renting 3 hotel rooms, they could rent your 3 bedroom home, at a lower cost, but also providing them with more beds. So one of the ways I do that is, yes, you can do bunk beds, but I will do sometimes something called trundle bed, which is basically a kind of day bed on top, and then you have a slider twin bed on the bottom. And so these kind of beds are perfect for kids. So you can put 2 kids, in two different beds in the same room. Um, I've also have inflatable mattresses, and now they make queen size, automatic inflatables. So that's something that's also very helpful. A lot of people ask for that, and that is probably the number one request I get is, do you have an inflatable mattress? Because to them, rather than sharing a real bed with somebody, some people would rather sleep on an inflatable mattress. So I would say that's your number one amenity.
Okay. So I guess my takeaway listening from you is that you're really focusing on a niche. You're not competing where all the other people are competing in the downtown areas where it's saturated.
Hmm.
You might be a little bit ways away, but you're also providing them with what they actually request, right? A place to stay and, a place to sleep in. So you're making sure that there's enough beds to go around and, having 1 or 2 more beds than the other host next door
Hmm.
might be the plus that kind of tips it in your favor, is
Yep.
what I'm hearing. Okay, what would be like a exit plan, any contingencies? Because I've been reading on the news articles lately that more and more local government is stepping in and placing rules and regulations, and it's all different from market to market. But let's just say a rule has changed and you can no longer do this. What is an exit plan that you have in mind? And can you kind of elaborate on that?
So that's interesting that you actually bring that up, because I actually shut down my first Airbnb just a few weeks ago. And it was my second rental arbitrage. It was a 2 bedroom, 2 bath condo. And it was rented for, I was paying $2,500 in rent, but I was easily getting 6,000 or more in gross rents each month. So I was doing a really, it was doing very well, very popular. But what happened is it was a 2 bedroom condo. And I would say right off the bat, it's one of the places you want to avoid is condos, because the condos tend to have very strong HOA and management, because the condo is not owned by one person. It's owned by a whole bunch of owners. And so the management has to, abide by their bylaws. So I went into this condo worrying about this issue, but then the owner had reassured me that, oh, it's not a problem, it's never been an issue, you should be fine. So because I was so desperate to start at that early stage, it was literally my second month that I started Airbnb and rental arbitrage. So I said yes, hoping that everything would go well. Well, it went well for about 11 months. And finally, when HOA said, hey, you can't do this anymore, I was out of there within a week. So not because I was, worried, because I was just like, I wanted to be the best tenant ever for my owner, because I still want that owner to refer me to other, owners and things like that. So, so right now I just moved the furniture to storage, and I'm actively looking for another rental arbitrage to place that furniture into. So there is definitely that kind of like, this is my vacancy cost, like the big, when you have a turnover cost, this is kind of my turnover cost. I'm paying about $150 in storage for my furniture. I'm looking to move into a new rental arbitrage soon.
Yeah, your exit plan is, I mean, until the music stops, if you have to move, you're going to move it to another one, but you're going to continue to do this.
Yep. And I think if you're an owner, if you own the home,
Right.
there are different exit strategies. And let me just mention one. So that HOA had basically said, you can't do short-term rental, like super short. You can't do 3, 4, 5 day short-term. I think they would have been okay with 1 month, 2 months, 3 months. So if I was able to get a tenant that could stay longer term, they would have been okay with that. And in fact, I did. I got a 12-month tenant, corporate business tenant. And so I was super stoked when this happened, because I thought, hey, I got this exit plan and I executed it. But then that tenant lost a contract with the government that basically dissolved the lease because they couldn't stay. And so so I let them out of the lease with some penalties. I took the deposit, and so I actually got some extra money from that. But so that's one of the ways you can get around these restrictions. So not all restrictions are like, doesn't mean that you have to close your business. There's definitely a workaround on advertising and marketing your property separately to get the longer term tenants. And let me just say one more thing, like a lot of my friends who do this, they tend to be in that business of wanting to get the 1, 2, 3 month longer guests, like traveling nurses, and these kind of traveling business travelers, so they can avoid that legal issue, because a lot of cities are trying to get people to stop doing the very, very short 3-day, 4-day, 5-day short-term rentals. So that's definitely one of the ways to get around that.
So I think we're getting close to wrap things up here. Is there anything else you'd like to share about the short-term rental market as well as Airbnb in general? I know we talked about the pros, and we talked about how to get started and kind of your experience setting up your rentals. Anything else that you may have missed that you would like to share?
Yeah, so I think one of the most important things for success is finding the right boots on the ground, like anything else in real estate, right? So my biggest boot on the ground is my cleaning, the cleaners. So having good cleaners who are your eyes when they go into the house to check on your home, to keep your house clean. They are the most important staff, people that you can, have to make decisions on. And so that's something that I would definitely focus on. The other thing is, it is a business. You're doing a customer service business, but it doesn't feel like a full-time. I mean, it's definitely not a full-time job. So just imagine this. It's like this. So for 5 days this week, I might have done hardly anything for my business. And then all of a sudden I get a booking request. So then I send a text message, and telling them, hey, welcome to my house, and this is what's going to happen. This is how you're going to check in, right? Then you have to think about the checkout, scheduling the cleaning. And then, once in a while, if there is a minor maintenance issue or question that the guests have, they might message you. So there is a bit of that like interaction back and forth. But it doesn't feel like much when you're only doing 1 or 2 properties. But once you start getting to 3, 4, 5, 6, that's when it starts to really become much more frequent in terms of the messaging. So I think the next step would be, as you grow your business, is to systematize a lot of things, but also start, looking at, acquiring co-hosts and guests to help you manage those properties that way. And that's actually my goal for 2019, is to make this a much more passive business by having staff or people working for me, managing the business, and I just check in. So in that way, I'm hoping to spend as little time as a traditional rental while making, 5 times or maybe, close to 10 times, probably not 10 times after you hire people to help you. But yeah, definitely multiple of the cash flow that you would find with a regular traditional rental.
Yeah, I mean, just listening to the numbers of the one that you just shut down, if I recall, you
Hmm.
said, your expenses were around 2K, but your income was around averaging 6K. So, I mean, those are just ridiculously good numbers. I mean, I look forward to hearing how your Napa one goes once the weather warms up just a little bit,
Hmm.
and how you're going to scale this thing. But yeah, it sounds really exciting, and I look forward to hearing more about it.
Yeah, yeah, for sure.
Well, that wraps up our show for this week. Next week, Joe and I are going to talk about how to get your first rental property. So I know a lot of you are excited for that one. So please tune in next week for episode 7. If you thought this episode was helpful, please do us a favor and leave us a review on iTunes, Stitcher, or wherever you may be listening. We appreciate your support, and we'll see you next time. Thank you for listening to the Bigger Cash Flow podcast. Please remember that opinions of the guests are their own, and nothing on this show should be considered personal or professional advice. Please consult your tax, legal, or financial advisor for personal advice that fit your unique situation. See you next time.